Welcome to episode 22 of the Wealth Amplifier. Different voice giving you the intro to the episode today with our fearless leader, Matthew Liebman, out today. We got myself, Patrick Swift, and Aaron Marks here on today's episode.
Hello, podcast world. I feel like my voice is actually a little hoarse because I haven't done one of these in a while. It's like, I got been talking all week.
I know.
Not prepared. Was out on vacation.
Well, it's nice because our brains normally get to just react initially to whatever Matt says on the intro.
That's right.
So
wasn't ready.
We're off our game.
So we're in mid-July. What's new?
Midsummer Musings. It does feel like at least just between like the three of us and people here at Amplius, it definitely feels like the summer. Not that we're not busy, we definitely are, but I just mean like you've been out 1 week, then Matt's out a week, then I'm out another week, hence Matt not being here this week. It feels like middle of the summer, that's for sure.
It definitely slows down. We always have things going on, but there are certain times of the year where you're revved up and the phones are ringing. And I've been reaching out to clients, as we always do, just to touch base and getting a lot of voicemails. So as people should, take a little vacation or break during the summer when you get some downtime.
Yeah, and especially if you can get out of the Northeast area, which I know you did recently. You could elaborate on that a little bit. It's been so aggressively humid in this region. It's nice to get the heck out of here.
I got out of the Philly heat and went to Cabo in Mexico into a different kind of heat. It is way more humid here, though. I mean, it was hot there both, but it's been pretty gross in Philadelphia the last week or two.
Yeah. So tell people about Cabo. I know I got some snippets, but
cool place. I've never been there. Easier for the West Coasters to get there than us. You can take some direct flights from New York. We did a stopover in Dallas, but great area. Restaurants, you can walk around the towns, hit the restaurants, and it's not just Mexican restaurants everywhere. There was great sushi. There was Italian. There's art festivals. It's a fishing mecca. It's a golf destination. So definitely a place I'd go again.
Yeah.
And the flight wasn't daunting. As I mentioned at the stopover, it's not daunting. It was 2.5 hours and another 2.5 hours. So it was manageable.
Yeah. I feel like because there's very few direct flights from like the East Coast of the United States, it actually is more manageable for that reason. Because you get a little break, you get a little in between. When I was there last year, I think we flew out to LAX, which made it a little more difficult because like you're basically on the West Coast, and then it was a quick bunny hop. But I think I don't know if we've talked about Cabo on the podcast before, but it's from what I've heard, I think I might be getting this wrong, but I think more billionaires have purchased property or moved there or gotten a place there than any other place over the last very recently, last 3 years or something like that. It's like
there's some money there. Yeah. We saw a yacht, like the yacht of all yachts. And I know there's bigger ones like Bezos and, all those crazy ones, but this one had a helicopter on the back. It was wild. It was pretty cool. Yeah.
Case in point. There you go.
Yeah. How about this? I don't know if it's a coincidence or not. For those watching on YouTube, how about that shirt you're wearing right now?
Oh, I didn't even think about that. I got the shirt in Cabo at the Kivera.
I'm aware.
Yeah. That's too funny. I didn't plan that at all.
Yeah, you got the skulls and everything. Got the whole look.
It's definitely a summer golf shirt, that's for sure.
I'll tell you what, one thing, this is my first trip with having global entry going out of the country. We just got it. I don't know. Do you have it?
I don't. I did TSA, but yeah.
So we just had to go down to the airport, all the nonsense, and it was a pain, but whatever. So we have this stopover in Dallas, and our flight was a little bit delayed or whatever. And the next flight was delayed, and if we got in real quick and through customs and the whole thing, we would catch another flight. So we hustled through. There's like a 45-minute line for customs. We walked through in 10 seconds. It was amazing. Still was not there early enough to get the next flight. So it almost backfired in a sense that now I got through so fast and just had to wait longer somewhere else. You can't turn back after having gone through that global entry line once. It is no line. You just walk right through.
Right. I need to do that. I think I didn't do it because when I did TSA pre-check, it was COVID, and it was like a whole mess to try and get global entry. Yeah. But I need to reconvene on that, especially next time.
What's been doing with you?
I've been a lot more boring than you and Matt, I think, recently, but I'll be in Rhode Island next week for our annual family vacation. Mom's side's been going up there since she was a kid in like the 60s. So major history every year we do it. Should be nice. Um, Not much otherwise. Been playing a little bit of golf and holding it down where possible. And that's about it. Nothing crazy.
So you want to turn it over into what's been going on work wise?
Yeah, let's do it. Let's do it. I know. I think in general, right? You and I were talking about doing this, and with Matt being out, making it sort of it's the middle of the summer and having it that kind of be the theme, like us kicking it around, a little more casual, even though we're always a little casual. Things that we think about, maybe pull the curtain back on things that we've talked about, you and I, on the podcast, or about bringing to the podcast. And you and I have talked about this over the years, I guess, in multiple facets of like marketing or website development or podcast content series. But the idea of doing more niche oriented content around stock awards, corporate benefits, executive benefits for people who are working for big public companies, because we have a lot of clients in that field. So you want to tease that a little bit, talk a little
Yeah,
bit
but I
about
think
that?
there are so many people in the US and then directly that work with us that have, just like you said, equity compensation through an employer, most of the time public companies, sometimes private, but mostly public. And there's just nuance upon nuance upon nuance. And every plan and every public company is different. I think that's where people really have questions, whether they didn't work for a public company and then they go to one and they have to understand it, or you go from one to another public company and you have to, hey, how do I tax efficiently dispose of all these shares, and what do the new
Right.
shares work, and what do I have to do to set those wheels in motion properly? So yeah, we were thinking about doing a sort of a series, not just a one-time talk about stock awards and move on, but hey, this time we're talking about restricted stock, and this time maybe about options, the next time about deferred comp, and sort of quick hitting that people can listen to into. We've written some blog posts, we put them out on LinkedIn, they're on our website, but I think talking about them would be helpful for people to
Yeah,
hear.
I think so. I mean, let me ask you this, right?
Yeah.
We probably find that for a lot of public companies in the US, a very common form of equity compensation are restricted stock units or RSUs. And they're probably also the simplest to understand in terms of like variety, different types of equity awards. If you took 10 clients or 10 new clients and you ask them, explain to me, A to Z how an RSU works, how many people do you think would get that? Would be able to nail that?
Nail it, 3 or 4.
Sure.
I think they'll know in general.
Yeah.
But I mean, there's not a lot to know, as you said. So maybe that number is really like 5 or 6. But to
Right.
really understand them and the philosophy and what they are and what to do with them and the ins and
Yeah.
outs and tax implications,
Right.
what would
Right.
you say?
I think that number seems about right. I think with RSUs as the example, it's definitely a higher number as opposed to options or even ESPP shares. But I would say there's almost always like, it's like, let's say it's 5 out of 10 people, but of those five, they might have like 90% of the truth of an RSU. And that extra 10% is actually really important. They're like, oh, I thought it was this. And you're like, oh, no, 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 no. So anyway, a case in point, I think I think you find that even for the clients we've worked with for years, they always need like a little reminder, like, oh yeah, that's right, that's how that works, and that's what I need to be thinking about. Oh, that's for people who have options and RSUs and deferred comp and all of it. Then it becomes like, oh man, there's a lot of complexity here that I didn't even really think about.
So I know we wanted to dedicate another time to talk about this, but I'm going to tell you a quick one just because it relates back to the Mexico trip. So I was with a person, works for a public company, and I've seen this more and more that you'll get a bonus in the form of stock awards that vests either 130 a year over 3 years or at the end of 3 years in a cliff vest and whatever, but it vests as cash, not as stock. Have you seen that much?
This is cash, not as stock. I
Correct.
have. I've
So
seen it.
I actually think, and without going into too much detail, I think that is a great idea because a lot of what we talk about with clients is that restricted stock really is. It is a cash bonus that you are taxed on it at vesting, and you are voluntarily, by not selling it, choosing to use all your cash bonus to buy more company stock where you already
Right.
work and you're already getting stock and things like that. So now these other companies are saying, hey, we don't want you to become over concentrated. You're
Right.
going to be tied to the performance of our company because we're going to give you $1 worth of stock and it's going to hopefully grow to $2 by the time it vests. But once it vests, we're just going to give you $2. It's not going to be
Right.
$2 of stock. So I just
Right.
talking to actually that one person and another where companies work like that. And you know what this goes off the back of? 401k plans used to allow you and sometimes force you to hold company stock in your
That's right.
401k.
That's right. That's how
And
the company would match sometimes.
that's right. And you know what would happen? Lawsuits, because the
Yeah.
stock wouldn't do well. And all the employees are saying, what the heck? Why do I have to hold all this stock? So they stop
Right.
putting stock in their
That's
401k.
right.
And I'll
That's right.
bet that's why it's happening in the restricted stock world
Definitely,
too.
definitely could be the case. And this is case in point why we should start doing a series, because I have thoughts on that. Like, here's the issue, right? Because I agree, and that actually follows our philosophy pretty well that you just touched on of, hey, just get cash, diversify it. Psychologically, people, I think I have found, have the propensity to spend more when they have a high income versus a high asset base. Meaning, quick example, you have $10 million in the bank, no income. You're probably, from what I've seen at least, you're probably not spending a ton of money. Like you're like worried about spending money. That's maybe an extreme example. You make $10 million a year, you have $0 in the bank, you're spending a ton of money. People love
Absolutely.
income. They love that security blanket. So I think that's the only bad thing is like, okay, if you're getting cash bonuses essentially that vest tied to your company's stock, will people just spend more money instead of saving it? I think that that could happen unless you got a good plan, you got a good advisor. So like anything else, nothing is black or white. It's all gray, and it's up
Yeah.
for interpretation and discipline.
So the audience can see how we can spend an entire episode on this. I'm actually going to, because I'm going to keep going by one more thing, but then we'll
Mm-hmm.
we'll move on.
Yeah, yeah,
Another person we just started working with. I won't mention where they work, but it is a private company where they get stock, and every single person here that listening knows the company. I won't reference it. And they mentioned, they didn't pay attention to it for years and years and years, and due to their neglect, it actually worked out because the stock has gone crazy in the private markets.
yeah. Mm-hmm.
But they've made a lot of money, and so you can, I shouldn't say stumble into a good outcome, but that does happen too by not acting. Like we always
Right.
talk about not overreacting and acting in bad markets, and sometimes just closing your eyes and putting your money in and not paying attention can be great as long
Yeah.
as somebody's hands are on the wheel.
Right.
But yeah, look, it can go both ways. Our job is just to give you the I don't want to say the safest, but at least an intelligent opinion and strategy so things don't get out of hand,
Yeah.
good or
Yeah.
bad.
That is true. The other thing I'll throw in just real quick, and then we will turn the page, because I just remembered it. I bet the companies that you're seeing that are maybe changing their game plan on how they're giving types of equity awards and cash and what, tech companies historically have loved giving RSUs in pure form. Do you know why?
You've told me this before. Something about their earnings or taxes or what?
Yeah,
What is it?
both. Bingo. So tech software companies, and I don't know the exact mechanics, but I guess if you're classified in whatever GICS industry classification type of thing, classified as a software technology company, you give employees RSUs as compensation. That does not count as basically overhead expense the way a
Hmm.
salary or a bonus would. And as a result, your earnings look better. So
Hmm.
you get better earnings, your stock price goes up, blah, blah, blah. That's not why tech companies have done really well, I'm sure, but it's not a bad accounting benefit to them either. So maybe,
No,
maybe we see it in other industries. We see more of the same from tech industries. Who knows?
who knows? All right. So you want to talk about we're July. Talk about where the markets are, where we thought they'd be, where they're going, what the
Yeah.
crystal ball says.
Yeah, I think so. I mean, things have
Somebody
been
asked me yesterday what the stock market's going to do tomorrow or the next day,
right.
and I said, I wrote that down somewhere what the answer was, but I lost it.
Well, so here, why don't I start out with this? I'll give you a stat, and you and I haven't talked about it prior to, so it'll be your pure organic reaction. Markets have done really well this year. For anyone who hasn't paid attention, U.S. stocks, the same, more of the same. We've had a very narrow stock market in the U.S., meaning top 3, 4, 5 companies have really led things higher on the back of this AI obsession. Apple, Microsoft, and NVIDIA, Amazon, they're all shooting the stars out. And that's really what's led things higher. And it feels a little frothy for people like us. They're always worried about reversions to the means, which is how markets react long term. It just feels a little bit like, how long is this party going to last? Because it does feel a little bit like a party we're sort of lulled. So I saw this morning from a research company that we get, and I like a lot of their research. Basically, here's a stat. I'll read it. With 6 record closing highs in a row, so the S&P 500 reaching a brand new record high 6 times in a row, the total for 2024, which just happened this week, is starting to pile up. Now, in 2022, there was only one record high close. It was the first trading day of the year, and then we had a bear market that started in 2022 just after that. So only one record high in 22, 0 in 2023, because we were actually still coming back, even though 2023 in isolation was a good year for stocks. We were still coming back to record highs from the very beginning of 2022. So far in 24, there have already been 37 record closing highs. So we're in a new bull market. That ranks as tied for 14th most. So nothing crazy about that so far, halfway through the year. But if the current pace keeps up, there would be about 70 record closes, which would be tied with 2021 for the second most ever, trailing only 77 record highs from 1995. Now, let me give you my thought real quick before you give me yours. To me, even though we just said, hey, or I just said, maybe things feel a little frothy, a little too high, a little parties just sort of, we're being lulled to sleep by a nice party. To me, that actually doesn't seem like that crazy of a stat. Like if we finished with 70 record highs this year, and that was second most all time, comparing it to 2021, I almost would be like, okay, like I could see it, and I wouldn't be that surprised. It doesn't feel like it's that out of
I
reach.
don't find it to be crazy either, because if you have a good year in general without a ton of volatility, which we have not had, if you hit a record high, the next dollar is another record high, and the next dollar is
Correct.
another. Now, I think what you're talking about is closing at a record high every day. So throughout the day, you keep hitting, and then so throughout the day, there might have been 25 new record highs for every dollar. Every penny it goes up,
Right,
it's a
right,
new
right,
record high.
right.
That's
Yeah,
right.
so it's the close.
Correct. The Dow is at 39,000. That means there have been 39,000 highs, because every single time you hit one, you can't go to 37,000 without getting to 36,000 first.
Right.
So, if you have a high and not a pullback right away, you're going to inevitably have a
A lot
whole
of highs.
bunch.
Right.
So the question is, what comes next, I guess.
Yeah. Well, I think, yeah. So that stat was just interesting to me, where it felt like, yes, it feels like we're in this like sort of things are just going up in the U.S. stock market, but that's not that crazy of a stat. That's just kind of how I read it, at least.
Yeah.
But anyway,
Well, we talked about before about the irrational exuberance, and seeing that in conversation with friends and clients and TV, social media. Have you been seeing it in your interactions day to day?
sort of exuberance around markets, you're
Yeah,
saying?
did people not wanting to miss out? This is amazing. We got to buy more.
I haven't really seen it, which I would take as a good sign.
Oh,
I think,
absolutely a good sign.
you know,
We've said it before. I mean, once everyone starts calling us to buy that one thing, like, the
right.
game's over.
Yeah. I mean, I've definitely had a few conversations around AI and NVIDIA, but all of my response, and they've all been with clients who kind of like and trust me, hopefully. They've been like, yeah, that makes sense. And there hasn't been a whole lot of like irrational types of question asking, which is good. But yeah, I haven't had a ton of it. What
Neither
about
have
you?
I. Neither have I. No, I haven't. And I think maybe one of the reasons is because election cycle's coming. People are
Right.
getting nervous,
Right.
which will be a lot of our conversations over the next 6 months.
Yeah. That is true.
So I think people are a little on edge.
Could be.
Yeah.
I mean, we'll see. Markets don't seem to care right now about elections,
No.
to me at least.
Well, they don't at all. Past history shows it doesn't matter. It doesn't matter if it's
Mhm,
Democrat
mhm.
or Republican or this or that.
Right, right,
Market's going to do what the market's going to do.
right,
And now everyone always says, well, this time's different. Well, maybe it is, and maybe it isn't.
right. History will say
And
otherwise.
usually it's not any different.
Right.
It feels like it in the moment, but generally it's not.
Right.
Like, yes,
Well,
we've got some extremes going on right now with personalities and ages and this and that, and
right. Yeah, I mean,
everything's unique in its own right.
that's true. Right. Well, of course. Yeah,
Yeah.
that's a good point. I think
Yep.
on market behavior, though, we didn't look up. We did the predictions episode 6 months ago, 7 months ago, whatever it was. We haven't looked at those, and we won't until the end of the year. But I think, if I'm remembering correctly, I had my choice on like the U.S. stock market was a return for the S&P. We call it the S&P 500 in like the I think 15% range, like
I
a
think it was something like that, and
middle
I
of the
think
road.
you referenced their what was it that after a good year you generally get another good
You
year or
generally
something
get
like
another
that.
good year. It's usually not as strong in a percentage return as the prior year, which
Hmm.
makes rough sense. So that's interesting, and that's kind of the point that I was bringing up for us to talk about on this podcast. Is I find almost inevitably every year when we get to the end of the year, and it might just be the nature of our business, but almost irrelevant of how markets finish the year, I find myself looking back at like the mid-year point and being like, that feels so long ago, even though it was only 6 months ago. And
Hmm.
that becomes microscopic in a year where the return that is prevalent through the midway point is not at all what it ends up being, which is
Oh
oftentimes
yeah.
the case, of course.
Oh yeah.
So like right now, the S&P 500 is up 17% on the year. Great. If the year ended today, my prediction on that at least would look pretty darn good. But there's a very good, I shouldn't say a very good chance, but I'm interested. I'm sort of like curious about this moment in time and fast forwarding to December when I'm looking back on this conversation and this point of the year of like, man, like remember when we thought things were just going to keep closing at record highs for another 30 times and it didn't, or it did, or whatever the case is. I just find it's interesting how that like paradox occurs where we're always talking about as human beings, I think, how quickly time moves and how fast the year moves. But then you have these like snapshots in time, again, maybe just specific to our business, where we might look back in December and be like, oh yeah, that's so funny that the S&P was up 17% and then it did this, you know?
Yeah. Yeah. Everything seems so fast, but the reality is, I heard Jerry Seinfeld say something like this, and they go, time moves so fast. And he goes, no, it doesn't. When you're in the moment, there's a lot of moments. If you go back to all those moments, it takes forever.
It's true.
But
It's
yeah,
true.
we all have such short-term memory. We all want to guess what's next. Like April was I don't want to say a horrible month. I think it was April. S&P broad stock market was probably down 4, 5, 6, 7% in 1 month. That doesn't feel good when you look at your statements. I don't think anybody remembers that. Just like they're not going to remember
Right.
at the end of this year what the market was up at. At July, he said it was up
Right.
17%. So yeah, we all want the crystal ball, but no one ever remembers what we saw in the crystal ball either way.
Right.
Once you get to that future point.
Well, and I'll give a year in context to put an example. There's a good year that came to memory earlier today. 2018, at the halfway point, let's call it July, actually, just to in context of when we're talking today, we're talking July 11th, 2024. At that time in 2018, stocks were up about 5%. If you look at the S&P 500, the NASDAQ was up about 13%. And if you fast forward to the highs for that year, they were right around that. The S&P was up as much as like 8.5%, and the NASDAQ was up 17%. And then, do you remember that year where we had an awful third quarter and then an awful final month of the year in December?
December was terrible, right?
Yeah, things went down. The NASDAQ was down as much as
Was it like
14%
yeah. Oh yeah.
in
But what year?
this is 2018, December 21st. It was such a wacky year, right? December 21st. So let's just talk about the NASDAQ for a second. The NASDAQ was as high as 17%, 17.5% in August of 2018. And then on December 21st, the NASDAQ was minus, oh, that's the ACWI. Hold on, let me just make sure I got the numbers right here. Yeah, the NASDAQ was down as much as 10%. December 24th, Christmas Eve.
From the high.
Yeah, minus 10% from
Yeah, it was
being
like
up
that Christmas
17.
Eve. That's right. I remember
But
that.
then, but then it finished the year a mere 7 days later, December 28th or less, 4 days, 4 trading days, minus 4%. So then it made up another 6%.
That's why
Yes.
predictions are impossible. And I know everyone
Totally.
wants to know, just sort of in general, where do they think the market's going? But you can't nail it because you're right until December 21st or whatever. And then,
Mhm.
it's probably with weekends, like 7 trading days left and up 10% or down 10%.
Yeah.
And you look like an idiot because you said up 20 and it was up 20 and it ends up 12. How can you
Yeah.
call for 20? It was only
Right.
12. Well, you were right 355 days of the year.
Right. Yeah, that was a wacky one.
There was a guy. There was one of the chief. I think we might have talked about this before. One of the chief investment officers at our previous firm was banging the table. Matt would remember exactly. So we'll have to ask him on a prediction on where the S&P 500 was going. And I forget, frankly, if he was saying it was going to be up or down,
Mhm,
but he
mhm,
was way, way off.
mhm.
And they fired him because you can't be banging the table and wrong. And
Right.
like 2 months later, or he hit it right on the money. It was 2 months. It was 2 months off, or 3 months
Right.
off, or whatever it was. But it's
Right.
probably timing. It's impossible to predict.
It's impossible. Those jobs always made me laugh because, like, we used to get at our old firm an update like a couple times a year on S&P 500 and market strategists changing their like original prediction, which I always thought was such a
Yeah,
joke. Like, what do you mean? So it would be like January 1st, they expected whatever, and the consensus was whatever. And then the Goldman Sachs strategist on July 11th decided to change his like, what do you mean you changed? Like, you can't just change. Your prediction was your prediction. So I always just thought that was like such a joke of
yeah.
like who cares? How can you actually read into this stuff and like actually care and be like impassioned about it? I don't know. Clearly I
Which is
am.
why we are not revising our January predictions, which we don't even remember exactly what they are, and we will review at the end of the year to hold us
Right.
accountable.
Right.
All right, so we're 25 minutes in here. Don't want to keep everybody too long. Um, I've got a couple headlines. I do have a hoagie review.
Your call. I can do either one. I definitely want to hear about the hoagie and the place you were just at. So however you want to.
All right, let's do
However
it.
you
I
want
can't bring up the hoagie review and not do it. So,
to.
been a little while since my South Philadelphia tour, which was great. I was happy to be in South Philadelphia again for a Phillies game the other night. My brother was in town, is still in town, and I think I'm pronouncing the name properly, but Pastificio, right down by the stadiums near Chicky and Pete's and Termini's, other staples in Philadelphia. So I've always heard of this place, and my brother's like, it'll be hard to get through. It's a game. We're playing the Dodgers, big matchup. It's right next to the stadium. 50,000 people are going down there. So we're like, we'll get the order in early. So we put the order in online at 3 or 4 o'clock. We say, pick it up at 5:30. I have an hour drive. I'm sitting in traffic. Like, it's going to be a scene picking it up. I walk in, there's nobody there. So my reviews are all encompassing here. So I don't know
Yeah.
whether that's a good or a bad. There's
Right.
nobody
Right.
there. It's good
Yeah.
because I walked right in, I grabbed it and left.
Right. Could be a red
Why
flag though.
wouldn't?
Right.
That's right. It was an indicative of the sandwich. So I'll also preface this that we ordered online, and maybe if I ordered in person, it would have been a little different because I like oil and vinegar. I like that zing with the vinegar. When you order online, there's no oil and vinegar choice, but in the description of the hoagie, I got a turkey. It's turkey and cheese, oil and seasoning. So I think, okay, that's their thing: oil, not vinegar, and seasoning. I'll get that. I'm not going to
Right.
say anything else. Like, give me vinegar. Well, maybe they don't have vinegar. Maybe
Right.
that's
Right.
not that's not their deal. So I got turkey hoagie, lettuce, tomato, pickles, hot peppers. The other things okay, get the sandwich. We take him into the stadium. We got a whole bunch of different ones to review. So roll was awesome. A seeded soft roll, which I believe is Alyssio's roll. I could be wrong on that. Not Sarcone's, which is generally harder. The peppers, again, are the banana peppers. I still don't understand why you're not getting legit hot peppers or the hot pepper relish and chopped up. And they
Yeah.
come from a jar. Like, come on.
Right. Right.
That's
Right.
Subway style,
Yeah.
in my opinion. But
Yeah.
the sandwich on the whole was good. Could have used some more creativity in the peppers and the vinegar. But all in all, eating it down at the stadiums, had a good sandwich. It's not at the top of the rung, but I'm going to give it a 7.4, maybe a little low,
Okay. All right.
but left a little bit to be desired.
So 7.4 is okay. you're hungry for a sandwich,
Yeah,
you're happy enough. You're okay. Hey,
that's fine.
I got the sandwich. I'm glad I got the sandwich, but
It
it's
was
not
fine.
like you're not talking to your buddy about it the next.
Correct. We ordered 4 or 5, and everybody that was eating, I didn't get any rave reviews.
Right. Yeah.
We'll say that.
That's fair. That's a
Yep.
good rating. Hey, the world needs a good, not great hoagie place. You know what I mean?
And there it was.
Can't all be great. so
Um,
uh so what else is on the agenda coming up? You got any other good trips planned? Any fun
we've
stuff?
got visiting day for the kids. They're both at overnight camps, so we're heading to Massachusetts to go see them. We are doing a quick trip to Colorado. Pat's secret favorite place, or maybe not so secret.
Yeah.
So I need a dinner reservation when we go out there. So we're going to chat about that
Okay.
offline.
No problem.
Or anybody that's listening that wants to give
Yeah.
me a Denver recommendation. How about you? You got Rhode Island.
So I'll be in Rhode Island next week. I am moving the first
Mhm.
week of August, which I think I've spoken to a little bit about to different people. Those are the two big things that are on my radar. Oh, have you been watching or reading anything good?
So on this trip out to Cabo, I picked up. I think it's the Gambler,
Oh,
the
sure.
Gambler,
Yeah.
the Billy Walters story, and I
Okay.
remember seeing this 60 Minutes interview with him a whole bunch of years ago, and it's sort of not based on it, but it was the premise of the beginning of the book was talking about that, and it really changed his life. And my gosh, talk about hot and cold and high and low and being broke and being having $10 million in the bank. It is a wild ride. I'm a chapter or two before the end of the book, but I pretty much know the punchline. So
Yeah.
that was a good one.
Nice. That's
Yeah. What about
I
you?
didn't uh I've been reading Morgan Housel's Same as Ever finally, which was his most recent book
Mhm.
that came out. Awesome. Everyone should read that book. Just like his Psychology and Money book. This one's less specific to finance. It's just like great insights about the world that I think are really cool. I'll share one
Right.
actually because I think it's a cool conversation piece. Um, he talks about how things stay the same, right? That's like the whole premise of the book over time in history within human societies. And he talks about how Jeff Bezos has this great quote or talked about it in like a lecture speech. He said, um, everyone likes to CEOs and leaders of companies talk about what to invest in because what's going to change in the next 5 years or 10 years. Me, I'd rather invest my money on what I know is not going to change. So, for example, for Amazon, he knows, and this is what he said in his lecture, people are always going to want convenience, low prices, and quick delivery. So that's not going to change tomorrow or 10 years from now. So I'll invest in that. And God willing, he's done pretty darn well with
Isn't
that.
that sort of Warren Buffett's thing?
Yeah. Yeah.
Like candy. Everyone's gonna be eating candy.
Yeah.
Snickers was the number one selling candy bar 50 years ago, and it's still today. I don't know if that's the
Yeah.
one, but
Yeah.
yeah, yeah, good point.
Yeah.
Not try to find the next Snickers, just buy Snickers.
Yeah. Correct. Um, I've been watching House of Dragons. I don't know if you were ever a Game of Thrones guy,
Uh-uh.
but for anyone, I won't go into detail about it, but I'll just say I was very upset, like probably every single person who ever watched Game of Thrones at the way Game of Thrones ended. And I think it's turned a lot of people off to this new prequel show that's out there, House of Dragons. And I thought the House of Dragons first season was awesome. It just started the second season. It's like 4 or 5 episodes in. I've been a big fan. I think they're back to their roots. They're nailing it. And then this episode that they just had this past week, in my opinion, is a maybe top 5 episode all time, including Game of Thrones. And I was like, wow,
Mm,
maybe HBO is
mm.
really back. And at least with regard to Game of Thrones types of shows. So I was
Very
psyched.
cool.
And I think that's been the vibe around the show from people I've spoken to, which is great.
Very good. All right, this is a good one. Good and casual, good summer talk. We'll be back at it again soon. All three of us, I believe.
Yeah, yeah.
Um, any signing off comments?
No, we miss you, Matt. Hopefully he's having a great trip in Iceland, killing it
Iceland,
out
that's
there.
right.
Awesome
I,
trip.
about 4 times I've Googled what is the time in Iceland
yeah,
because I'm texting him or emailing him, and I keep it's only like 4 hours ahead. I figured it must be like
yeah,
the other side of
yeah.
the world. It is not.
Because it's a little west, I think, of like
Yeah,
Europe and whatnot, which
that's
is
right.
And
just
so,
it's only
yeah,
a couple hours. All
yeah.
right. Well, thanks
Yeah.
again for everybody joining in.
All right. Adios.
Bye.